guys, I'm here to show you about my stock account update and today's market. Today my stock account has earned $3,355. Jerome Powell, the Fed president, said the interest rate could be higher than expected. Stocks ended lower and the Dow fell 570 points. Fed's new threat, used car prices accelerated again, rising in February to their biggest rise since 2009. In my account today, I've gained, including the post-market price, I've gained 4.91% of my total asset. Right now, the net asset of my account is $77,549.89. Today, SQQQ rose 3.72% to $37.96, and the DRB rose 7.23% to $49.86. For the market today, most of the industries closed lower. Dow Jones Industrial Average made a loss of 1.72%. Nasdaq Composite made a loss of 1.25%, and S&P 500 made a loss of 1.53%. The industries that made the most loss, including the banks, the financial industry, and the auto manufacturers. The Dow fell more than 570 points, erasing year-to-date gains and turning losses. Fed Chairman Colin Powell said the pace of interest rates could accelerate and the final rate level could be higher than previously expected. Markets fear that the Fed will keep interest rates higher for longer. U.S. stocks closed slightly lower on Tuesday, but after Mr. Powell's speech, the major indexes have weakened and closed sharply lower. The focus on U.S. stocks on Tuesday was the testimony from Federal Reserve Chairman Colin Powell to the Senate Banking Committee. Investors closely watching comments on the state of the U.S. economy and his expectations of the future path of the Fed's interest rates. He'll continue to testify before the House Committee on Wednesday. It was Powell's last public speech on interest rate policy before the Fed's next meeting on March 21st to 22nd. The last chance to impact the market expectations before the meeting. He said, "We'll continue to make successive decisions based on the full data coming out and the impact on the growth and inflation outlook." Mr. Powell said, "Continued increases in policy rates may be appropriate so that the stance is tight enough to bring inflation back to 2% over time. History warnings not to relax policy too early. The final interest rate level could be higher than expected." Powell said, "Restoring price stability may require us to remain a restrictive policy stance for some time. The Fed's rate hike is slowing demand in rate-sensitive industries. We'll continue to make decisions meeting by session based on the full data and the impact on the outlook for growth and inflation." The January hiring, spending, and inflation data partly reversed earlier week trends. He said, "The latest economic data was stronger than expected. The correction for the previous quarter suggested that the inflation could be higher than expected. Falling inflation down to 2% requires lower inflation in core services, not including housing, and probably some weakness in labor market." He said, "We'll meet our 2% inflation target. We have the tools to make inflation down over time. Core inflation has not fallen as fast as we hoped, and the Fed has a long way to go." After Fed Chairman Colin Powell's speech, the 2 to 10-year yield curve upside widened to 97 basis points. Mr. Powell noted that the core service prices continued to rise and saw no signs of deflation. Analysts said, and the agency believes that some of the speeches made by the Fed officials since the last meeting have partly effectively made markets aware that perhaps the Fed will raise rates to a slightly higher level than expected. That could mean that the Fed will not only raise rates by 25 basis points each at the next 2 meetings, but could raise 25 basis points at all, or even at the next 3. He said, "The restoring price stability may require us to remain a restrictive policy stance for some time. The Fed's rate hike is slowing demand in rate-sensitive industries. We'll continue Quincy Crosby, chief global strategist at LPL Financial, said, before the testimony, the future market had a roughly 30% chance of a 50 basis point rate hike. Mr. Bob made it clear that the Fed would respond if the data showed that inflation continued to move in the wrong direction. Investors can see how the stock market reacts. At this stage, they don't know how much the CPI and PPI numbers will be, but Mr. Powell's statement is clear. Markets are very well aware that the Fed will not be vague about the data, especially when it suggests that inflation continues to climb or remains sticky. U.S. stocks closed mixed on Monday as Goldman Sachs gave a buy rating on Apple for the first time in 6 years, giving a boost to the stock and the market. Apple has a weighting of 7% in the S&P 500. Other large stocks such as Alphabet and Microsoft also posted gains. BTIG analyst Jonathan Krinsky said, it really feels like going back to 2020. When a few heavyweights like FANG stocks, Facebook, Amazon, Netflix, and Alphabet, Google's parent company, determine the market ups and downs. For outsiders, this suggests that the rally seems to be in its final stages. The recent rise in Treasury yields, particularly the 10-year yield, above the 4% mark, worried investors. Further news threat: new used cars prices accelerated again, rising in February to their biggest rise since 2009. The used car prices industry index, a leading indicator of rising inflation, rose 4.3% in February from the previous month. The data shows that, unless the prices for core services started to fall, the road to downward inflation is likely to remain bumpy, the commentary said. Early last year, the U.S. government blamed the rising inflation on the hot used car market, and the car prices have increasingly become a leading indicator of inflation. Recent data shows that the used car prices accelerated again in February, posting a new threat to the Fed's anti-inflation battle. Cox Automotive, the largest online and offline OTO trading platform in the U.S., recently announced that its Manhattan Used Car Value Index, which tracks used car auction prices, rose 4.3% in February, 4.3% in February from January, the biggest monthly gain since October 2021, and the biggest gain in 14 years since the 4.4 month-to-month rise in February 2009. Meanwhile, the index shows that the used cars prices in the U.S. peaked in April last year, and have fallen then. It fell 7% in February from a year earlier, the lowest year-on-year decline in the past 5 months. The media noted that the used car data may not be reflected in the official March data released in April. These figures mean that, unless core services prices start to fall, the path to continue downward overall inflation remain bumpy. Retail prices of used cars in the United States often follow wholesale prices, and the Manheim Used Car Value Index reflects the wholesale prices dealers pay for subsequent retail used cars, and is the primary indicator for tracking trends in used car prices. As Wall Street News previously noted, Deutsche Bank found that the high-frequency real-time Manheim Index is usually 2 months ahead of the used car and truck sub-index in the CPI, suggesting that the recent price rise in used cars will trigger a big rebound in the CPI-related components in a few months. The rise in used car wholesale prices in February was also a concern for retail buyers. Critics say prices can accelerate further with the boost of tax returns this spring. Supply of new cars have been severely affected in the early days of the COVID-19 outbreak because of chip shortages and other supply chain problems, and has improved, but lack of new cars has pushed many buyers into used car market. Cox Automotive Economic and Industry Insight Senior Manager Chris Free warned that used car retail inventories are falling faster than we expected. New and used cars information and analysis platform Advance recently announced that the average price of a used car in the United States this year was $28,106, up 38% from the January 2020 average, and the current new cars are $48,000. At the same time, the cost of buying a new car increases. Interest rates on used cars loans are zero levels in more than a decade. A Goldman Sachs report late last month noted that the used car auction prices have rebounded 7.5% over the past 2.5 months, suggesting upward pressure on inflation for used cars and potential new cars in the early spring. further complicating the outlook for U.S. inflation. Goldman Sachs believes that there are two main drivers of the rebound in used car auction prices: temporary constraints on the supply of the car chips and a prolonged decline in the sales in the rental market. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.